Let's also welcome on board Prashant Kumar then from Yes Bank and chat about what's happening with Yes Bank right now. Mr. Kumar, good morning. Good to have you on the show. 9 months after the moratorium imposed, can you say Yes Bank turnaround story is now complete?
So I think you are absolutely right in terms of reconstruction of the bank has been completed. We are back into the business with full bank. We are very comfortable on the capital side with a 20% capital adequacy. And on liquidity also, we are seeing very good traction from both retail as well as corporate deposit. And we are meeting all the regulatory liquidity requirements from the RBI. And if we see in terms of recoveries, so I think there is a demand, there is improvement in demand from the retail side, MSME side, a small corporate also. And in terms of collection also, if we see as compared to the first quarter of the current financial year, things are much better, things are improving. So we are quite hopeful that going forward, things would be much better, not only for Yes Bank, but for the entire banking industry. But I think the most critical thing would be in terms of, we need to see in terms of the credit growth. So I think if the credit growth picks up, I think that would be really good for the banking industry.
Right. Mr. Kumar, your operating profit growth has been very healthy. How's the credit growth been, though, in different segments?
So on the operating profit side, if you see the Q1 and Q2, we have been able to demonstrate a very good operating profit, despite the Q1 was something almost a washed out from the pandemic point of view. So fundamentally, what we are doing, gradually we are reducing our cost of deposit, and also we are disbursing new loans. So during the current quarter, we are hopeful to disburse something around more than 10,000 crores on the retail and MSME. And also in the corporate side, disbursement would be in the range of 3 to 4,000. But at the same time, the most important part is in terms of controlling our cost. So if you see up to Q2, we have been able to reduce our cost by almost 20%. And I think this momentum would continue. And maybe for the full year, our cost reduction would be in the range of 15 to 20%. So I think this operating profit and also the recoveries from our stress asset would really help us in meeting the credit cost.
Kumar, your credit cost guidance for FY21 and 22, what is it and what's the outlook? Has there been a marked improvement across troubled sectors such as aviation, hospitality, real estate?
So I think this year, like when we started the year, we were not nobody was able to anticipate how long the pandemic would continue and what would be the impact. So I think what we are seeing, there has been an improvement. But this improvement is not across all the sectors, all the industries. So if we see three sectors, especially the real estate, the hospitality sector, and also anything related to airlines. So they have been severely impacted, and we are not seeing that kind of improvement in these sectors during the current quarter also. And I think maybe next financial year would be much better. So I think with the dispensation which we got from a regulator, I think by restructuring and the slippage, so it would remain at a little elevated, I think, for the entire banking industry. But the actual impact we are going to see in the fourth quarter.
All right, and going forward, the mortgage rates have come down like never before. So home buyers have clearly been on a spree to buy due to the stamp duty cut as well. That was another incentive. Do you think that this sector, which was a huge lag for the banking sector, is now seeing a material pickup, and that fortunes then within the real estate turning can thereby help banks like yours?
No, so in terms of, if we see the individual home loans, you are right, like the rate of interest is very low. And we have seen a momentum in terms of purchasing the homes by the buyers. And I think that that momentum has also been helped by reduction in stamp duty by government of Maharashtra. And the builders are also offering discounts on the sale. So what we are seeing that actually the unused inventory is being consumed by the new buyers. But I think from the real estate side, the most important thing would be that when the projects which are not yet completed, whether they would be in a position to complete. So I think that is something which we are looking for. And I think that is not only going to help the real estate developers, it is also going to help the individual home buyers where their money has been stuck up for years together. And I think this is something which we are looking in terms of maybe during the budget. I think that would be our key expectation, that if something can be done for the real estate, that would be very helpful.
Sure. Now, it's become clear as well that the focus is pivoting from corporate to retail. We've seen that retail used to be 45%. Is this now going to move up? Do you see the shift? And while corporate is slowing, will you still be focusing on higher quality corporates?
So basically, our strategy in terms of it is not like it has to be only retail focus, but definitely, and the focus would shift from the corporate to retail. And retail, which used to be around 45% retail and MSME, I think in next 24 months, we would like to see it around 60%. But we would continue to be on the corporate side also. But definitely, for some time, we would be not looking at very large project loans. But I think we would be very keen to participate in the working capital consortiums and also the trade finance for the corporates. On the retail and MSME, what we are seeing, it is good in terms of the returns. It's also good in terms of your risk management, and it's a more granular loans. And then you are also able to connect a large number of customers. So what we are doing, we are adding almost 60 to 70,000 customers every month on the liability side, and then it gives us an opportunity to cross-sell. And similarly, when we go for the retail loans, it also gives us an opportunity to engage with those customers on the liability side. So I think for our bank, which is also very strong on the digital side, to remain more focused on the retail and MSME is a right strategy.
Okay, and how is Yes also tapping into the digital opportunity? How much market share do you have in UPI, for example? And what about digital loan, organization? Will underwriting eventually move to digital as well?
So like if you see, Yes Bank is very strong on the transaction banking side. Around 40% of the UPI transactions, which is more than 800 million transactions a month, is being routed through Yes Bank. And now, apart from the dominance on the transaction side, we are also moving in terms of loan origination by using the digital capabilities. And very recently, we have entered into a tie-up with one of the best in the world, Salesforce, where the entire credit underwriting would be in a digital mode. And the decisions in terms of the credit underwriting, which takes, it could be anything like from 7 days to 10 days, 15 days, it would happen in 2 minutes. And in those times, we are going to check the entire background check on the customers from the rating profile, from their income tax, and so on and so forth. So I think on the retail and MSME, the digital capabilities in the next financial year would be very, very helpful, not only in terms of expanding the loan book, but also in terms of controlling the cost and taking the right credit calls.
Sure. Mr. Kumar, talking about the stress pool, are we really going to meet the 5,000 crore rupee target for this year? And that means we need to recover about 4,000 crore rupees in Q3 and Q4. Would that be achievable?
So at the beginning of year, we had a target of 5,000 crores of recovery from our stress pool during the current financial year. In the first two quarters, we could recover 900. But I think we are absolutely on track. And in the current and next quarter, we would be able to recover, say, around 4,000 crores, which would be having an approximate impact on P&L around 2,500 crores. But what we are seeing that we have made a provision of 75%, but we are able to recover between 50 to 60% wherever we are going for resolution and wherever we are able to enforce the securities. Keeping in view this trend, we are quite hopeful we would be able to recover around 50% from our stress book over a period of time.
Okay, Mr. Kumar, great to have you on the show. Thank you so much for taking the time out and joining in today on ET Now. Let's take stock of what the market is up to, holding steady by a good 0.5%. The breadth of the market outperforms, and it's telecom as well as metals, which are your big winners today, along with some moves coming across the auto universe as well. Take a quick break. Lots more lined up on the other side.